All right, good evening, everybody, and welcome back to Walks in Wall Street. Today is October 17th, 2023, and it is a Tuesday. It's about 9:02 p.m., and we are reporting live from Midtown Manhattan. We are currently streaming right across the street from the Trump Tower, and there seems to be a lot of barricades up, so we'll kind of explore what that's all about. I'm not too sure. Maybe the former president is in town, because there's tons of police officers. They set up all these police barricades here, so who knows? We will see what's going on there. But for tonight, as everybody knows, it is a really, really important week on Wall Street, particularly because it is officially the start of earnings season, and we are pretty much well on our way into Q4, right? This is the last quarter of the year. We are already halfway through October, which I can't even believe, which means that before we know it, we are going to be going into the holidays and the new year, which is kind of wild. So just in a quick recap, at the beginning of every single earnings season, as we know, it's kicked off with all of the major mega banks on Wall Street, such as the investment banks and also a lot of the major financials. So far we've had Bank of America report. They reported today. We had pure play investment bank Goldman Sachs reported this morning, and I was actually listening in on the conference call. We'll talk about some interesting things that were said there. Wells Fargo have reported, Citi, as well as JP Morgan Chase. So we're going to be going through there and doing a little bit of a deep dive throughout each. But first, let's take a look at the bond market, because we have had some interesting movements in the debt market. So if you go to cnbc.com/bonds, once again, cnbc.com/bonds, it'll pull up a pretty good visual of the yield curve, right? So a 30-year treasury right now, which is kind of wild to even talk about, is yielding just under 5% at 4.925% for the 30-year. It's pretty good. Now, the U.S. 20-year is over 5% now, so 5.155% for the 20-year. And this is very important to pay attention to, particularly as it relates to bank earnings, because one of the standouts that I would say, particularly on Bank of America's earnings report, and if you want to follow along with us during this stream, if you type !BAC. So once again, !BAC, that is the ticker symbol for Bank of America. It's going to drop the deck, okay? It's going to drop the Q3 earnings call deck. And the biggest standout for me is just all of the unrealized losses that's on the balance sheet for Bank of America. And if you remember during our Miami live streams, I think this was about 2 days ago, we had a conversation about Silicon Valley Bank. I believe this is when we were walking South Beach, and we were sort of talking about some of the major catalysts that sort of set the fire to the collapse of Silicon Valley Bank. And it was at the time, massive pile-on to... Hey. Oh, thank you so much. I appreciate that. Thank you. Hey, we'll enjoy New York. Thank you so much. Take care. So they were nice people from LA. Appreciate you watching the show. So one of the interesting things that was concerning to me is Silicon Valley Bank piled so much money, almost about $80 billion, into long duration bonds, particularly very, very low yielding long duration bonds, particularly in their MBS portfolio, so their mortgage-backed security portfolio. And if you look at Bank of America's balance sheet, they have unrealized losses of about $131 billion on held-to-maturity bonds. Now, the vast majority of this is in their MBS portfolio as well, because if you think about it, it's not like they were rapidly speculating in the market, kind of like leading up to the great financial crisis, right? They weren't, dabbling in toxic derivative instruments. Essentially what happened here is, during COVID and a little bit after that, you had extremely artificially suppressed rates here in the United States. So a lot of these mortgage bonds, the mortgage debt, were extremely, extremely low yielding. And these are very safe investments, right? Mortgage-backed securities, U.S. Treasuries. But the problem is exactly what we'd explained before. Bank deposits are liabilities to the bank. They're not assets. So when you go to a bank and you deposit money, that's not an asset for the bank. It's a liability. The bank has to do something with that money. They have to lend it out. They have to invest it. Or if they want to be safe, right, quote unquote safe, what they'll do is they'll just buy bonds. But the problem is now that interest rates have moved up so much and so significantly, guess what? The mark-to-market value of those bonds you've taken significant losses because the correlation between bond yields and bond prices is inverse. So as we've had all of these interest rates move up, the present value of the bonds that Bank of America has bought, particularly in their MBS portfolio, has really, really diminished quite substantially here. So we'll talk about that. Bank of America reported today 90 cents worth of EPS. That's up 11% year over year. And they also came in a little bit higher than expectations on the revenue front, coming in at $25.2 billion, up 3% year over year. Now, net income or profitability came in at $7.8 billion. That is up 10% year over year. Now, another thing that we're going to talk about tonight as it relates to many of these banking institutions, and I always say this, one of the greatest things to pay attention to during earnings season, particularly as it relates to the major financial companies, right, the credit card issuers, is to keep tabs on delinquency rates. So I'm going to, I'll put a QR code on the screen real quick because this is going to be in my next newsletter. So if you haven't subscribed to the Behind the Street newsletter, which is my free equity research piece, all you got to do is scan the QR code, punch in your email, and every other Thursday, I will send you all of my research for free as it relates to the equity market, fixed income, and the housing market. And a big piece of that research piece that's going to come out next Thursday is going to be historical trends of credit card delinquencies pre- and post-pandemic. Okay, this is very important to pay attention to. So if we look at the credit card loss rate at Bank of America for Q3, it was 2.72%. Now, if you look at Q2, right, just 3 months ago, it was 2.6%. So we're having a little bit of a bump there. If you go before the coronavirus, so the big C, in Q4 of 2019, these are pre-pandemic levels, the loss rate on credit cards was 3.03%. So as interest rates has started to move up here, here's the problem. Consumers are starting to become more and more delinquent on their credit cards on a 30-day time frame and a 90-day time frame. You're seeing the same thing at Citibank, ticker symbol C. The pre-COVID loss rate was about 3% to 3.25%, and every single month since we started raising interest rates, we've been noticing that across the board of these major banks, a lot of the big credit card issuers, you're starting to see delinquency rates start to kick up. Now, this is definitely something to watch out for here, because as you see balances climbing on credit cards, you also have interest rates climbing, which means this debt is going to accrue and accrue and accrue. Compounding interest works both ways, so definitely something to watch there. Okay, I'm going to go ahead and close up the laptop. I will say hello to everybody in the chat, and then we will get started here. So allow me one moment to just close up shop, and I will say hello to everybody in the chat, and we will get started, okay? Give me 2 seconds. And then I'll remove that QR code from the screen. But again, yeah, if you guys are just joining, it's going to be a bi-weekly research piece that I'm going to release every other Thursday after the market closes. All right, and we are off. Let me try to get this out of the way here. But yeah, I'm not sure if you guys could see these police barricades here. And sorry for the long intro. I know we're almost 15 minutes in, but this is very important to talk about because I think we're going to have some interesting things coming down the pike here. All right, I think we may have to go out the other way. So just to sort of orient everybody, to give you an idea where we are, this is Trump Tower. And I work right here. This is my office. This building, 575 Madison Avenue, the one that's directly in front of 432 Park. Now, when I came out of the office, there was police cars setting up these barricades. There was, I wouldn't say Secret Service, but maybe just plainclothes officers or something like that, blocking off the entire street. So I'm not sure if the former president's coming to New York City. But yeah, you could tell the street is completely closed with all these. Say hello to everybody, because I haven't seen you guys in a while. Shannon is here. I see D. Michael, what's up? It's Over is here. Welcome. British Gray, Carol Williams. I see my good friend Solo 401. Solo 401. It's such a pleasure to see you. I haven't seen you in a long time. Meld says we're back in Manhattan. Yeah, we're back, and I think I'm slowly but surely adjusting to the temperature. When I left Miami, Florida, it was 88 degrees and bright sunshine. Now, it's not like it's bad weather in New York. It's just not 88 degrees and sunny, so I'm actually shivering a little bit. It's probably in the 50s now here in New York City. I see Nicole be winning. What's up, Nicole from California is here. Paul says, good evening, Tom. WNP is here. What's up? Type username says, what's up in New York City this week? Apparently a lot. Apparently a lot of stuff is going on. Now, this is a brand new sort of indoor-outdoor space they created. This is a really good coffee shop, Black Fox Coffee. And this is really nice because if you look at the ceiling here, this is totally protected from the elements. So if it's pouring, raining, or if it's snowing, this is going to be a really nice sort of communal space for people that work in neighboring offices in the community, in the neighborhood here, to sort of, have meetings and things like that outside, which is nice. Ooh, Nicole says, I'll be in New York City in February. Looking forward to the weather change. Oh, well, I guess for you kind of want the snow, right? Since you're from California, it's like 70 degrees and sunny every single day. So I think that'll be a good change for you. Well, I'm excited for your arrival. Please enjoy New York. Hey, Jeff in Southern Tier, New York is here. Says, hello, Tom and all. Valor Rabbit says, I want to visit New York City as well. What's up? DM is here. Says, hello, Tom and everybody. It is 55 degrees here in New York City. It kind of feels a little bit colder here tonight, DM. That may be because of the breeze, but we'll see. Josie is here. Says, Tom, you're going to be in New York City for Halloween? I think so. I'll probably be here for about 3 weeks. And then I have to go back to Miami. So we will be doing these live streams, here in New York City, pretty much for the next 3, maybe 4-ish weeks, month or so. Real quick, what you're looking at right now is pretty much, they're almost topping off 270 Park Avenue, which is going to be JP Morgan Chase brand new office tower. Maybe we'll have to walk by it tomorrow because it is earnings season, particularly for the financial sector. B. Cruz says, which month is in winter is the best to visit New York? I don't know. I would probably say, I don't know. I'm just not a big winter person, so who knows? T-Cal, what's up? Andrew Lee's here from Queens. JC, good to see you watching from South Africa. Tim Thompson says, hey, Tom, how are you? I'm doing good. It was a busy day for me today at work, but all good. Juan Fernandez says it's 68 degrees here in Miami. Love that. Susanna Q4 is here. Says, hey, Tom and friends. Dan Zhang says last year's winter was perfect to visit New York City. Yeah, I don't really remember too much snow, Dan. Not really. Hey, Matt G says, big news, Tom. I'm taking a new job as a project manager in the city. Whoa, dude, that's awesome. Well, congratulations on your success. That's fantastic. Where are you going to be working? I mean, you don't have to tell us the exact company if you don't want to, but where's your office going to be located? Hopefully Midtown Manhattan. Maybe we can meet up or something like that. My office is just off to the right, 575 Madison, but here again, you can see a lot of the barricades. Maybe there's something going on with the court cases here, who knows? Sharon, what's up? Welcome. So I guess we'll dive right into it, everybody. For those of you who are just joining, in the introduction to the stream here of Walks in Wall Street, we just did a quick overview of some of the main bank earnings and just a couple of particularly notable standouts, which I think we need to start to watch here. Now, every single earnings season, not to sound like a broken record, I kind of say sort of the same thing, right? Which is all of the major credit card issuers, we can kind of use that data as a proxy for the health of the US consumer. Now, we have a couple of interesting data points here. So in terms of card spending, both credit and debit card, across the board at a lot of these major banks, spending is actually up. Spending has increased significantly across the board of credit and debit. But here's the main thing that's concerning me, and I kind of want some feedback from you guys on this. The concern is the following. The concern is that we're starting to see a return to a major pre-pandemic trend or pre-pandemic numbers of credit card delinquencies. So one of the things that I would suggest, and you can sort of make this rudimentary, you can make it like a systematic process that you follow. If you go to the investor relations page on Goldman Sachs isn't a good example. Bank of America, JP Morgan Chase, Citi, right? If you go to their investor relations page, download the PDF of their deck that they present to investors, and they will give you the data of their consumer debt portfolio, right? What are credit card delinquencies for 30, 60, and 90 day? And you can track that on a quarter-over-quarter and a year-over-year basis. And we're starting to see those numbers trend back to where they were pre-pandemic. Now, if I had to make a prediction, I am always optimistic, but I am also a realist. I think we're going to see these numbers in terms of 30 and 90-day card delinquencies trend higher than pre-pandemic. This is the Bergdorf Goodman building across the street. This is 57th Street and 5th Avenue. We are officially now on Billionaires Row, and they are doing some very interesting construction here on the Tiffany, but I don't know, what would you guys say? I think we're in a predicament here where a lot of the pandemic stimulus that was induced by both the monetary policy and fiscal policy, I think is starting to wear off. I think inflation, although CPI is coming down, right, the consumer price index has rolled over, the individualized categories of CPI, which I would include the most important metrics, such as food, such as shelter, those continue to not necessarily trend higher, but stay elevated. And you're starting to see consumers get a little bit stretched here. You're starting to see credit card balances grow. You're starting to see consumers spending more, not because they want to, but because they have to. That is a major, major distinction as we stand across the street from the Tiffany flagship building. Western Mass Dave's, the savings that folks had during the pandemic are drying up, hence more credit use. Yeah, that's definitely a pretty good thesis for that, Dave, 100%. Chinook wins as consumers are tapped out. Time for a healthy correction, in my opinion. It's possible. Chinook wins, it's definitely possible. I always like to use that terminology. It's consumers aren't spending more because they want to, it's because they have to. And we could see that from the data. This is the brand new Tiffany building at Fifth Avenue. They did about $500 million worth of renovations, and unfortunately, there was a fire that caused a lot of damage. Keith says, Tom, in addition, auto loan default rates are the highest since 2006. Oh, Keith, that's a really good point. I had that on my list of things to talk about too. You're absolutely right. And, you know, in every market cycle, it doesn't play out the exact same, but it's very, very similar, right? So particularly when you have that last, I like to call it euphoric blow off top. And I believe that's what we saw in 2020 and 2021. I mean, euphoria in not only capital markets, right, like the stock market. I mean, there's no debating there was ridiculous euphoria there. It was almost cartoonishly ridiculous with the meme stocks and all the nonsense. But also from the consumer standpoint, right? Consumerism really exploded. You saw home sales explode both on the existing home sales and the new home sales front. I mean, home sales really, really exploded due to cheap money, right? Artificially suppressed interest rates, people getting 30-year mortgages for under 3%. I think the last time we talked about this, Keith, there was many of you in the chat that said you were able to refinance your 30-year mortgage for under 2.5%, some of you, which is just crazy to think about. Now think about that for a second. If you have a 30-year fixed at 2.5%, I mean, in this environment, you know, you're looking at the average 30-year fixed, and again, this is according to bankrate.com. The average 30-year fixed rate mortgage right now is 7.92%. That's up about 3 basis points week over week. You're never going to get rid of that. I mean, if you could afford the payment, you're just going to stay put because things have pretty much quadrupled. Kind of wild. Hey, TC says, I'm guessing discretionary spending has continued to increase. My first thought is the line at the Apple store that you stream from. Yeah, that's true. Yeah, I mean, it's a little weird. I think that was TC that said that. Now, here is I'll sort of give you my take on it, but I want to know what you guys think more. Yeah, Dave says no $1,000 car payment for the skateboard. Yeah, we definitely do not have $1,000 car payments for the skateboard. But you know, to Dave's point, I was reading an article, and I believe I shared this with the chat. On new auto loans, right? So on new purchases and leases, I believe the average car note now is above $900 a month, which I really can't even believe that that's the case. $900 a month for a car note's kind of wild. We are standing across the street from the Plaza Hotel. Look at how gorgeous that looks. This is one of the most iconic hotels, not only in New York City, but in the entire world. And right behind it, you could see the Steinway Tower. Now, the Steinway Tower is the skinniest residential apartment building in the entire world. And I think it looks great right next to the Plaza Hotel. And you could see 53 West 53rd Street in the distance. But so to TC's point, when the iPhone 15 launched, Apple, ticker symbol AAPL, this is probably one of the most anticipated companies that are going to be reporting this earnings season. There was a line around the block here. So this is the GM building, very famous GM building that Trump actually owned at one point. But right here, the line was wrapped around the block. Now, I wrote a piece on this a while ago. I believe, okay, here's my take. After the great financial crisis, the Federal Reserve was forced to hold interest rates pretty much at zero, right? Artificially suppressed rates. And everybody wants to talk about inflation, everybody wants to talk about CPI, right, the Consumer Price Index as it relates to inflation. But I also like to think about inflation in another way. And sort of here's how I think about it. I think about inflation in terms of asset prices, both equities and real estate. Now, if you look at the breakdown, the top 10% of Americans own 90% of the assets as it relates to equities and real estate. So yes, the market has quadrupled and then some from the lows of the 2008 financial crisis, and real estate has gone on just a gangbusters tear. But the problem is the vast majority of people who benefited from that rally were not the bottom 90% of Americans. It was the top 10. So, or it was the top 10% of Americans that really have benefited. So you have this massive distortion of wealth in this country. You have the extreme haves and the extreme have-nots, right? So if you were worth, let's say, $10 million liquid, and you had 50% of your net worth in equities, well, I should say, if you were worth $10 million and you were $5 million liquid. So if you had $5 million in equities and $5 million in real estate in 2008, well, fast forward now, you're probably worth, 20 or even $30 million. But, again, so artificial suppression of interest rates makes access to capital and access to liquidity very, very easy for wealthy elites. And it is not so easy for, the lower middle class and even middle class to, use this leverage, use that cheap money to acquire assets. It'll do really well for employment, so you'll have full employment. But, when you have those distortions, that's why I sort of liken it to corporate socialism. It's because we just give everybody, all these big corporations, free money. And many of these corporations have used it. Yes, they've used it for research and development. They've used it to hire employees, but they've also used a lot of it to buy back their own stock, right? So I think when you see those lines outside of the Apple store and all of these crazy trade prices in New York City real estate, it just goes to show, in my view, that particularly in major cities like New York, you have an extreme wealthy class and then an extreme impoverished class, which is not good for a healthy society. So hopefully that will change. I don't know, what do you guys think about that? Agree, disagree, any different takes? Hey, Loyal is here. Says, hey Tom, I bought my house in 2010 for $472,000. Financed $376,000, 30-year payment was $2,300. Refinanced to a 15-year at 3% payment, and it was $3,100. Says Loyal. Very interesting. Thank you for sharing that, Loyal. Steve CR says, my paid-for real estate is actually worth less. Interest rates determine the buyer's ability to pay. Steve, when did you acquire your property? That's actually surprising to hear. Hey, Juan Fernandez, that's awesome. I wish you best of luck on your new job as well. That's fantastic. So since it's our first day back in New York, everybody, right across the street is the Sherry Netherland. I always like to point this out when we are here, because if anybody's read Reminiscences of a Stock Operator, this is where Jesse Livermore used to hang out a lot. And I love the neighborhood. I love the proximity to Central Park. Hey, Kathy Lyons, what's up? Good to see you. Kevin Lanes is here. Let me catch up on some of the chats. Good to see you, Kevin. UniJ23. Bree Grams is here. Hawaii is here. What's up? Hey, Brad's Brain. Good to see you, sir. Thanks for joining us. We are now at Central Park South. Cynthia Beal says, hey, are you working in real estate now? I am. This is a very Upper East Side shot right here. You see the horse and carriage with all those older style buildings in the background. John Casey says, Tom, I bought a house in 1985 for $120,000, and today it's worth $600,000. Whoa. Well, congratulations on your success. With taxes, utilities, it's about $1,100 a month. So you can't beat that. Think about that barrier to entry, right? Now, I'm going to sort of play both sides of the argument here, but a lot of young people would say, look, back in the day in 1985, you could buy a starter home for what did John say? Hold on, let me see. You could buy a starter home for $120,000, right? So to John's point, in 1985, he bought his first house for 120 grand. Today, it's worth 600. So imagine being a young person, right, even millennial or Gen Z, and maybe you have a job and you're making $100,000 in a big city or something like that, and you're like, all right, I want to go look for a starter home now. Well, guess what? You're not going to get a starter home for $120,000 in the United States of America. Now, maybe in some markets, right, but the markets in which we talk about and cover all the time on the live stream, near big metropolitan areas, it's just not going to happen. It's not a reality. A $600,000 house on Long Island, New York, right, which is a suburb of New York City. You could think about Nassau, Suffolk County. It's possible to get, a 4-bedroom, maybe 2-bath house for right around that $600,000 mark, or maybe even a little bit more if you're in a good school district. But that's how much those starter homes go for now. So it's a completely different ballgame and a completely different story. Now, additionally, to sort of piggyback off that comment, as we are standing outside the beautiful Plaza Hotel residences. So on the Central Park South side, everybody, this is where you have the residences. So if you own or rent, you go up the stairs here. If you're staying in the hotel, you're going to make it right at the corner, and it's going to be the entrance facing the GM building. So you have the entrance to the hotel, and then you have the entrance here to the residences. But in addition to that, right, not only do you have the starter home being $600,000 to $720,000, you have the property taxes that are going to cost you 16 grand or more, which is crazy. I just had coffee with a good buddy of mine who works at Neuberger Berman.
They're huge.
And, very smart guy, really successful guy. And he's like, I just got my tax assessment again. I just got my tax assessment for, he lives in a town in Nassau County. And it went up again, and he's paying almost $20,000 a year for property taxes on a starter home. So even if you are making pretty good money by standards, taxes, particularly property taxes, are a really, really big issue for many New Yorkers and even people in New Jersey. So. Hey, Hawk fan says, Tom, I'm 35, bought my first house for $200,000. It's worth about $600,000 now too. Wow, dude, congratulations on that. That's a good buy, man. So that's another thing. The good news is a lot of people still have a lot of equity in their homes, which I think is saving a lot of people. Now, one of the data points I will be tracking is if there's going to be an uptick in home equity lines of credit, but I'll sort of save my thesis on that for the newsletter. Steve CR says, Tom, I protested one property tax and it came down to $30,000. Trina, what's up? Hey, Rob H says, hey Tom, how you doing? Interested to know how your flight costs. You know what? My flight actually wasn't too bad this time. I flew from Miami International Airport to JFK. I think it was like $190 with the taxes. It wasn't too bad. In my experience, flights have come down a little bit. It's nothing like it was during the pandemic when I could fly for $78. I just want to point something out here. This is the Ritz-Carlton at Central Park South. So it looks like they're doing some touch-ups on the sidewalk here, but originally this is the entrance to the hotel, and then at 50 Central Park South, where you see the doorman standing right here, this is the entrance for the residences. So if you own a pied-à-terre or something like that in the building, you would go in the door to the right. And one of the most successful brokers at Douglas Elliman, Noble Black, has a really, really nice listing here at 50 Central Park South. And I think he's going to be having an open house later in the week, which is a really nice property. I think it's listed for just under $16 million. Hey, Vinny, what's up? I don't know, anybody else in the chat do any flying recently? How has your travel costs been? Have they been coming down or what? TC's is my guess, home equity lines of credit will increase. I think you may be right. I think you may be right. Now, here's how things usually work in sort of like at the end of a business cycle, to TC's point. The very, very last thing that consumers will sell is their house, right? So let's say if you fall on hardship and you fall on hard times, usually, right, the studies show, as we're looking at the Steinway Tower, studies will show that most people will sell their more liquid assets first. So they'll sell their stocks, they'll raid their 401ks. That's another data point we need to talk about, everybody, as we're standing here on 6th Avenue. I've been doing some research, and the amount of people who are making emergency withdrawals from their 401ks just reached an all-time record high. Did anybody know that? I believe this was an article from Business Insider, and they said that the amount of individuals making emergency withdrawals from their 401ks have reached a record high, which, again, maybe we could piece all these things together and use it as a proxy for the health of the U.S. consumer. So you see emergency withdrawals from 401ks going up, you see consumer debt hitting an all-time record high, and now, as we've talked about at the very beginning of the live stream, Bank of America CEO Brian Moynihan, JP Morgan Chase CEO Jamie Dimon, and pretty much every other Wall Street megabank CEO, they say they've been seeing an increase in 30-day and 90-day delinquencies for credit cards. So we'll definitely have to watch that. Ukrainian Royal, thank you so much for your very generous and kind donation. Says, is this a good or a bad thing? I'm paranoid. Well, I think it's a bad thing. I mean, if people are raiding their 401ks, to pay bills, I think that's. I don't think that's a good thing in my view. But we'll see how it turns out. We'll continue to stay up to date on the data as it comes in. I don't want to be an alarmist, but this is just some of the things we've been seeing as bank earnings have been rolling through. Oh, wow. Orlando to JFK paid $12 round trip? Oh, that's because you used the Amex points. Got it. I was going to say, dude, send me the website that you're looking at, because I'll fly to Orlando and drive down to Miami if it's $12. Nancy says, John Kennedy Jr. used to live at one of the lofts in Tribeca. Really? Which one? Hey, Tariq Khan. Yeah. Tariq, good to see you. Brad's Brain says, Tom, credit card debt and 401k, then equity loans is the real story. Credit card debt is particularly can't be ignored. I agree. Well, I wrote a few of the data points down. Again, for those of you who are just joining, if you type !BAC, okay, !BAC in the chat, I programmed the Nightbot to drop the deck of the Bank of America earnings call today And if you scroll down, I think it's slide 7. Could somebody confirm that? I think it's slide 7. If it's not, you could find it. You guys are sharp.
I did.
So it'll show you the trajectory from pre-COVID, right? So Q4 of 2019 until now of credit card delinquency rates. And I believe, as we're standing on the corner of 6th Avenue and 57th Street here, for Bank of America, credit card loss rate came in at 2.72%. That was up from 2.6% in Q2. If you think about where it was pre-pandemic, it was right at 3%. So again, credit card delinquencies really fell off a cliff during COVID because the government was throwing everybody money, right? It was raining money, it was free money all over the place, stimulus all over the place. So people are actually using that money from the money printer and from President Trump and current President Joe Biden to actually pay down some debt. So you had the delinquency rates fall and now you're having them climb again. My prediction, right, as I said at the beginning of the stream, I think we're going to blow past pre-pandemic trend, and I think you're going to see at least a couple quarters here trend significantly higher than pre-pandemic trend. So we're headed southbound now. We're going to be walking down 6th Avenue. We'll be walking past the flagship Hilton Hotel, as well as Radio City Music Hall. And we're going to make a little bit of a detour tonight. And the detour is going to be right by Rockefeller Center because they're building the ice skating rink. Yeah, I went to grab a coffee with one of my friends who works at a firm over here. And we took a walk to Rockefeller Center and they're already building the ice skating rink. Can you believe that? Crazy. Pretty soon before you know it, Bryant Park is going to have the Winter Village complete. Some of you guys were telling me they started building the Winter Village at Bryant Park already. So, hey, Brick Stonewall's here. What's up? Good to see you. Richard Vogels is Tom. How has gold been doing? I think gold rallied like crazy the past 2 days due to the horrible, horrible atrocities that are going on over in Israel. So where is gold trading at right now, everybody? I think it's just below $2,000 an ounce, $1,950 or something like that. Chris says, yeah, AK was over there. Yeah, it's coming. It seems like it's coming faster and faster every year. You're right. Hawaii says, I love the Winter Village at Bryant Park. I do too, but it kind of depresses me when they put it up before Thanksgiving a little bit. Hawaii, you gotta. I was in Hawaii-esque weather, 88 degrees, bright sunshine. But look, seasons come, seasons go. I'm not going to complain about it. Hey, Ukrainian Royal, thank you so much for your kind donation. Says, I hope you were doing well, Tom. Glad to see you back in New York City. Thank you so much. I hope you had a good time in Miami. I did. I hope to visit New York City again soon. Absolutely, my friend. It's a great place to visit. I appreciate your support and your donation. But hopefully you get to be able to visit Miami soon, because I think you're going to like Miami, Florida. It's a great city, very clean city. Dan Zhang says gold is trading at $1,950. It has rallied 14 points since the futures market opened at 6 p.m. Yeah, Dan, what's your take on that? Because if you pull up a chart of gold, if you look at tradingview.com or MarketSmithy or Bloomberg Terminal, once you had the horrible terrorist attack that happened in the Middle East, in Israel, gold rallied like crazy gold rallied, which I guess makes sense. It's sort of like a flight to safety move. The dollar caught a little bit of a bid as well. Brad's Brain says, I looked it up, average credit card rate is 24.12%. Holy crap. So think about that for a second. That's a pretty good data point from Brad's Brain. Hold on, let me show you the front of the Warwick Hotel. Now, this was closed down for the pandemic, if you guys remember that correctly. It is open now. It's a nice hotel. It's more of an Art Deco style, the building. It's not going to be like the Park Hyatt Hotel that's in the 157 building that's totally encased in glass. This is more of an older style. I think you could probably or possibly compare it to the JW Marriott Essex House. Unfortunately, this is all covered in scaffolding. I'll try to cross the street to give you a better view of it, but it seems like every building now in the city is covered in scaffolding. I was on the Upper West Side of Manhattan earlier today, and it just looked ridiculous. I mean, every single building, literally, it was just scaffolding city. But you can kind of see what I'm talking about, right? Architecture is really nice. Looks beautiful. So to Brad's brain's point, right? So what do we know? Let's try to piece all the variables together as we're looking at the Steinway Tower here. You have a dichotomy where consumer debt is at an all-time record high. And you're starting to see consumers carry higher and higher balances on their credit cards. Now, why is this a problem? Well, according to one of our chatters, right, Brad, the average APY, or your interest rate on credit cards, are almost 25%. That's ridiculous. It's ridiculous. Almost 25%. So imagine, just at the wrong time, right? Just as interest rates are blowing off and interest rates are going up, you're starting to see the worst type of debt being accumulated and amassed. So that means, let's say if you're one of these people that are just making your minimum payment, and I'm not saying that in a negative way, I totally have sympathy for people and I understand what people are going through, and I'm just trying to make a point based upon the finances. I'm not trying to put anybody down. I'm very sympathetic of what's going on. I know it's very tough. But for a moment, if you think about people who can only afford to make their minimum payments, the problem lies, it's going to take you longer and longer and longer to pay off your credit card, because if you make your minimum payment and you have 25% interest rate APY, well, I mean, that debt that you have is just going to rack up and rack up and rack up, and it's going to take you that much longer to pay off the entire balance. So we have a very interesting dichotomy here, and it only doesn't apply to consumers, it applies to the federal government as well. If you think about where interest rates are on treasuries, the US government quite literally has to pay more money in interest, and I'm not sure how sustainable that is. The Steinway Tower actually looks pretty good. I can only imagine the views facing southbound. It's probably unobstructed of the Empire State Building, and maybe even all the way down to the World Trade Center. Hey, Carlos, the central banks run the whole show. Everything else is smoke and mirrors. Yeah, pretty much. I think that's a very simplistic way of saying it, but central banking, I should say, not only the Federal Reserve, moves markets, and it's been like that for a very long time, particularly since we've went off the gold standard, I should say. Hey, Jeanette is from Northeast Oklahoma. This is a fabulous way to see the Big Apple. I like being the armchair traveler. Thank you. Well, welcome, and hopefully one day you won't be an armchair traveler. You'll be here in person. So we welcome you all the way from Oklahoma. Thank you so much. Hey, Terry is here, says I always pay in full. I love credit card rewards points. Yeah, I mean, if you pay in full, that's the best thing to do, right? Because, again, if we do a time value of money calculation, why would I want to spend cash when I could, be doing something else with that cash, and essentially just using the credit card's money for 30 days and then pay it off in all big one lump sum? All right, so we are now passing Nürburgring Berman, which is going to be just to the left of us. But if you're all enjoying the live stream so far tonight, you can feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams about 5 days a week, starting at 8:30, and we'd love to have you aboard. Now, on the second floor in Nürburgring Berman, it looks like there's, I don't know what that is. Do you guys see that? Looks like Iron Man or something. I don't know what that is. It was weird. You guys see that? Looks like they're building like a Tony Stark thing up there. Hey, CP says, heck yeah, I made it on time. Hello, Tom and everybody. What's up? Thanks for joining us. Oh, it is Comic-Con. You're right, Leda. I completely forgot about that. It's Comic-Con at the Jacob Javits Center. Hopefully we don't start buffering, because we usually buffer right around here as we walk past the Radio City Music Hall. Hey, Robert Parker, what's up? Good to see you. So we're gonna make a left here, everybody. This is on West 50th Street and the corner of Avenue of the Americas. We're gonna stop by Rockefeller Center for a moment because they are building the ice skating rink. I know it's not even Thanksgiving yet, but they are building the ice skating rink. So let's go ahead and make a left here and we will check it out. Hey, the Mighty Bull, what's up? Laytha, I appreciate you stopping by again. All right, so we're gonna make this left and we're gonna go all the way down and you are gonna see a behind the scenes look of them building the ice skating rink at Rockefeller Center. Yeah, Chinook wins as crude oil prices are the real wild card right now. Some people think they're going back to $100 a barrel. We'll see. We'll see. Now, there was a massive bid in crude just before the weekend. I think Saudi Arabia threatened to cut oil production if the airstrikes continue on Gaza. Again, let's not go down that rabbit hole, but just reporting the news there. But here's the thing. Did anybody know this? And I think once I say this, many of you are going to be surprised. I wonder what these are. Look at this. Maybe they're props for something. But U.S. oil production is at its highest level in history. Did anybody know that? So regardless of what you see on the news or all the fighting back and forth between the Democrats and Republicans, we have never produced more oil in the U.S. in terms of output than what we're doing right now. Joan K says, Tom, happy to see you back in New York City. Thank you so much. I appreciate that. Wendy England's the same, I think, with Canada. Is that right? I don't know. Ooh, Jeff says Wegmans opens tomorrow. I'll have to stream that. Maybe I'll go there tomorrow. Will M says I was surprised by that headline. I was too when I originally heard it. Because you have these political narratives, right, that they like to slam down your throat. All right, so we are now here at Rockefeller Center. This is West 30th Street and Rockefeller Plaza. You could already start to see some of the holiday ornaments and decorations going up. Yeah, Tariq Khan says yes on that oil. Go USA. Still surprised oil isn't over $100 a barrel. Let's wait for the light here. I don't think it will go over $100 a barrel, regardless of what a lot of people think. I think we'll stay range bound. I don't know. I could be wrong. We'll see. I am. Western Mass Dave, I will be there tomorrow at 5 to 7, I think. All right, guys, check this out. Here we have it. It looks like they're almost complete building the ice skating rink here. What do you guys think? Thumbs up, thumbs down? I feel like they did this a lot earlier this year. It seems like yesterday we were streaming over here and it was the roller skating rink. Now this is the exact spot where they put the Christmas tree during the holidays. Christmas tree Rockefeller Center, this is the exact spot. And it overlooks Saks Fifth Avenue, which I'm not sure if that's the holiday display, but it looks like there's something on the face of Saks Fifth Avenue. I don't know what it is, but does anybody know what that is? It looks like some, I'm blanking on the name. Like, it looks like an astrology thing. I don't know. All right, let's continue to head down towards 34th Street, Penn Station. We'll check out the new Penn project. I just wanted to show you guys the, oh, Action Kit, let's see. It's the Western Zodiac for sure. Interesting. Yeah, I'm not too familiar with any of that stuff. I mean, I guess it looks kind of cool. I wonder if they're going to start putting the Saks Fifth Avenue holiday display up anytime soon. We'll see. But AK, it's good to see you. Thanks for joining us. AK, any thoughts on bank earnings so far? I'm not sure if you've been paying attention, but we've had quite the slew of bank earnings come in. Now, we've yet to talk about Goldman Sachs, and I think this is going to be the most important part of the live stream, in my opinion, for a couple reasons. Now, during the great financial crisis, everybody, if you remember correctly, Goldman Sachs, the Wall Street mega bank, Goldman Sachs fared better than the vast majority of banks for one particular reason. Is they were first to significantly mark down toxic assets on the balance sheet, or in other words, fire sale and dump them on other banks. So I was listening to the Goldman Sachs conference call. I was actually going to play a little bit for you guys so you could listen to it, but one thing really stood out to me. Like, I had to go back. I was like sort of half paying attention. I was at my desk, doing some work, responding to some emails, and I had the Goldman Sachs conference call up. And I was listening to it, and an analyst from Bank of America comes on the call. And the operator is like, all right, I forget his name. Analyst from Bank of America, go ahead with your question. And he's like, did I hear this correctly? And he was asking David Solomon. He's the CEO of Goldman Sachs. He was asking the CFO of Goldman Sachs, and he said, is it true, did I hear this correctly, that you marked down your CRE portfolio by 50%? And the CFO is like, yeah, we've reduced our exposure and marked down our exposure to CRE by 50%, which is a significant reduction, and we expect further reductions, further aggressive reductions moving forward throughout Q4. And I was like, whoa, wow. Now, how many times have we talked about this on the live stream over the past 6 months? I feel like it's gotten to the point of ad nauseum, and you guys are getting a little bit agitated because I keep repeating it. We've been talking about the looming potential, right, of some shaky ground in the commercial real estate sector, particularly office, right? And Goldman Sachs seems to be doing everything they can to fire sale and get out and reduce exposure to commercial real estate assets as fast as humanly possible. So I think this is something we need to pay attention to when you have a major Wall Street mega bank like Goldman Sachs literally slashing almost their entire exposure to commercial real estate. You pay attention to that. You pay attention to that with everything you got. So I'm going to be writing a full deep dive and a full piece about this on Thursday. So for all of the bank earnings, right? JP Morgan Chase, Goldman Sachs, if you scan the QR code, next Thursday, right as the market closes, I'm going to send everybody an email with my deep dives and takeaways from earnings season, particularly a lot of the major Wall Street mega banks. What metrics should we be watching? Particularly what is the outlook? And just what does this all mean? Because there was some really big major events that happened. So if you want to receive all of my equity research for free, that covers not only commercial real estate, but global equities and fixed income, go ahead and scan the QR code. It's going to take you to our Walks in Wall Street Substack, where I will send pretty much everybody in the chat, everybody who subscribes to the Walks in Wall Street Substack, you will receive all of my research for free, and it's a good way to support the stream. Brad's Brains is the newsletter or a separate email. It's going to be in the newsletter, and I'm going to clip the portion of the Goldman Sachs conference call and embed it in the newsletter. It's going to be a very detailed piece, and that will be out next Thursday. I just sent the one out last Thursday, so it'll be every other Thursday. Now, this is the big fountain here. They're actually going to drain this fountain in its entirety, and they're going to put those very big, what would you call them? Christmas ornaments right here? This is where they have that very famous Christmas display. Overlooking Radio City. Hey, Hang with Mark Mom is here. Good to see you, Hang with Mark Mom. Always a pleasure to see you. T. David Purcellis is there waiting to dump their Apple credit cards also. Well, they're trying to get out of that business in and of itself, right? So you do make a good point. Now, Goldman Sachs, they made a really big bet, and they tried to break into consumer banking. So for those of you who don't know, we'll just do a quick review. Check this out, right? JP Morgan Chase, yes, JP Morgan has an investment banking arm, right, where they do M&A, they take companies public, but they also have retail banking. Like I could walk in here right now and pull money out of the bank, right? Bank of America, the same thing. They have a very, very big and substantiated investment banking business, but they also have a really massive consumer banking division as well. Now, Goldman Sachs is not that. They are a pure play investment bank. So they do equity underwriting, they have a proprietary trading division, they have a mergers and acquisitions division. They're a pure play investment bank. But to T. David Purcell's point, a few years back, David Solomon, who is the CEO of Goldman Sachs, they wanted to make a big push and a big play to break into consumer and retail banking, which turned out to be not a good move. But look, companies have to try new things to try to expand market share. But it turns out that retail and consumer banking is a very, very difficult business. It is a low margin business, and it lost money. Goldman Sachs makes boatloads of money in their M&A business, in their equity underwriting, and their proprietary trading business. So to your point, yes, they are trying to get out of retail banking. I believe the platform is called Marcus by Goldman Sachs. And I think they actually sold that, or they spun it off, and they want to get out of that business entirely. So you're 100% right on that. Hang with Mark Mom, says Tom, Goldman Sachs will soon drop the Apple credit card, and I'm not going to be very happy when that happens. Well, what do you think's going to happen when that happens? Do you think they'll just find another bank to partner with? Hey, Sparks Carnival, what is going on? Welcome back to New York City, and welcome to earnings season. We were just talking about a lot of the major results from these big mega banks, and my biggest takeaway from earnings season so far is that credit card delinquency rates are going up, loan losses are going up, and it seems as if Goldman Sachs is predicting that commercial real estate's going to fall apart. They've slashed their exposure to commercial real estate by 50%, so much so that during the Q&A, the question and answer session of the earnings call, a Bank of America analyst was like, hey, did I hear that right? Did you guys mark down your commercial real estate portfolio by 50%? And the CEO of Goldman Sachs is like, yeah, we did, and we actually plan on doing significantly more reductions going into Q4. So, not to sound like a broken record, but if you think back to the Great Financial Crisis, which is kind of ironic we're talking about the Great Financial Crisis because we are on the corner of 50th Street and 7th, right outside of Barclays. Barclays Investment Bank, everybody. This used to be Lehman Brothers. Yeah, right here. So if you ever watched a documentary about the financial crisis, chances are you saw all of the bankers that used to work at Lehman Brothers walking out of those doors right there with cardboard boxes, right? And that's what really kicked off the financial crisis. But the reason why Goldman Sachs really fared better than most is because Goldman was very, very aggressive in taking initiative of essentially dumping all of those toxic assets off their balance sheet, getting it off, right? Goldman Sachs is very ruthless with that. They will take the markdowns so they can survive in the long term. Yeah, hang with Mark Mom says business accounts don't move on a drop of a hat, not even for Goldman Sachs. That's true. I think the strangest thing about that whole retail play for Goldman Sachs is they still do. They have such a robust business in the investment banking business. I mean, they make so much money. It's like, why not just keep doing what works and try not to diversify yourself? But look, I think it's easy to be like a Monday morning quarterback and say, hey, David Solomon did the wrong thing. What an idiot. It's like, you got to try things as a CEO. You got to, try to expand the business, test things out. You got to try. So I always say you should never like mock somebody for trying, right? Trying is how innovation happens. Because guess what? What if this was a raging success for Goldman Sachs and they built a massive retail and consumer business, right? You don't know unless you don't try, so. Hey, Carl Roth, good to see you. Destructionist is here, good to see you. Thanks for joining us. Jay Patel says it takes 75 years to build a city. Sparks Carnival says, I believe Microsoft now owns Activation Blizzard. I believe they do. I think their merger was approved. Hey, Action Kids says, I just talked about that building today when I made a video. Love that. Sparks Carnival says, Tom, I applaud Amazon for taking risks and admitting it didn't work when it fails. So many companies continue to pour money down the drain with a new venture. That's true. Yeah, it's sort of like you got to know when to cut your losses. I think that's very important. I think we're coming up on Morgan Stanley here. And Junior's Cheesecake. That's usually at Atlantic Terminal, Brooklyn. Wow, look at this, guys. It's a Tuesday night, and Junior's is absolutely packed. Look at that. There's quite literally almost a line out the door. Action Kids says, how many financial companies are there exactly in Times Square? It seems like a lot. Barclays, BNP Paribas, NASDAQ, Morgan Stanley, etc. I think BMO Capital Markets is also in Times Square. Or maybe technically, I think they're a little bit further towards Bank of America Tower. But a lot. You're right, quite a lot. And Action Kid makes a good point, right? And it's always funny because I always see a lot of YouTube videos. I get a lot of these recommendations, like asking people who work on Wall Street how much money they make or something like that. And the people will be shooting the video on the physical street of Wall Street. To which I say, nobody who works on the physical street on Wall Street works at a major investment bank. All the investment banks are here. The last standing investment bank on the physical street of Wall Street was Deutsche Bank. Their main office was 60 Wall Street, and they've since vacated, and now they are all the way at the end of the block here at the Time Warner Center. So if you think about investment banking, hedge funds, family offices, they're all right around here. Morgan Stanley, you have Barclays, you also have Mizuho, Action Kid. I forgot about that. So Mizuho is a Japanese investment bank that's adjacent to BNP Paribas, and everything's on Park Avenue. So 270 Park is the brand new JP Morgan Chase Tower that's being built. You're also going to have Citadel Securities. They're going to build another massive super tall right on Park Avenue. So chances are if you work on Wall Street, you do not work in Lower Manhattan. Chances are. Goldman Sachs is at 200 West Street. Hey Abdullah, what's up? Ooh, Sparks Carnival, you're right. Black Fox Coffee is really good. Hang with Mark Moms is HSBC near Times Square. You know, I think HSBC, let's try to get out of this area here. I think HSBC is across the street from the New York Public Library, I think. Now, I have one prediction. My prediction is that Morgan Stanley right here, I don't think they're going to be here for long. That may be a wild and crazy prediction, but that's my prediction. Because you're starting to see a lot of major companies who have offices in and around Times Square, they're leaving. And they're going to the Hudson Yards. Because Times Square isn't necessarily a great place to work. I don't know if I could stomach coming here every single day. So EY and We might as well walk past EY's old office since we're here. I believe they were at 5 Times Square, I think. They have now totally vacated, and I think 5 Times Square is almost completely vacant. And EY has now joined KPMG over at the Hudson Yards. I mean, Times Square is nice to look at, though. Just being here for too long and with the noise, but it is kind of nice, I'm not gonna lie. Oh, you know what I found out? I wanted to tell you guys this. And maybe tomorrow we'll walk past the building. But does anybody remember, I pointed out the building that used to be the old Bad Boy Entertainment? So Sean Combs, right, or P. Diddy, he used to have his record label, Bad Boy Entertainment, just across the street from the Ed Sullivan Theater. Now, I found out that Extel owns that building. I never knew that. So what they're probably going to do is tear it down and build some sort of a super tall. I don't know exactly what they're going to do, but I just found that out. It was an article in The Real Deal that showed that Extel owns that building.
Yeah, but online.
Never knew that. Hey Noah, good evening Tom, hope you're enjoying New York City. Thank you Noah. Action Kids says Times Square is the perfect place for the NASDAQ exchange with all the billboards. That's true. Hey Bill Rollins, what's up Bill? Thanks for joining us. Now, when I was a lot younger, when I was a teenager, I used to work right here in this Express. I actually still have my worker's ID badge. I used to stock the shelves, or not stock the shelves, what's it called, the floor plan? So I would work from 9 p.m. to 3 o'clock in the morning, putting the clothes back on the shelves after all the tourists threw it all over the place. I know, Sparks Carnival said, so the new Taylor Swift concert made almost $100 million over the weekend. Crazy. I mean, think about how much star power that Taylor Swift commands. It's really unbelievable. Now, I think her tour made $1 billion, or will make $1 billion, I think. Just try to make our way through here. Yeah, that's true, Hawaii. The NFL. What is it, the Kansas City Chiefs? Something like that? All right, let's make our way out of Times Square. We'll head towards 1 Times Square and we'll make a left at the NASDAQ. Pretty soon they're going to be dropping the ball here. would be 2024. It's nuts. Hey, Parker BG says go Chiefs. Now, I'm not a big football guy, but I do know the Kansas City Chiefs because I think they have the most famous quarterback of all time. I think he's even more famous than Tom Brady, right? Because he's a younger guy, and they say his career trajectory is probably going to be better than Tom Brady's. And again, I don't know anything about football. I'm just regurgitating what I read. I read sports stuff sometimes. Patrick Mahomes, I think is his name, right? All right, here we have the NASDAQ across the street. Hawaii, yes, is Patrick Mahomes. I know Sparks Carnival says Adobe stock is on fire lately, their generative AI play. You know, Adobe, they did such a good job. I always say Adobe and Oracle did really, really good jobs at repositioning their company from pure play enterprise software, I should say legacy enterprise software, to a SaaS model. So a SaaS model is like the model now. And particularly a lot of investors on Wall Street prefer a SaaS model to legacy enterprise software because it's very predictable revenue, right? SaaS is built on a subscription, either monthly subscription or annualized. So the metrics is MRR, so monthly recurring revenue, or ARR. And ARR stands for annualized recurring revenue. Because if you think about, you know, software and sales in that way, it's easy to build cash flow models and evaluate those companies, right? Because if you have, $100 million worth of annualized recurring revenue, and your churn rate is less than 5%, and you're adding, $1 million worth of ARR per month, that's a very, very predictable cash flow generative business. And Adobe, Oracle, all those big legacy software companies have done a really good job with that transition. This is the NASDAQ here. This is where they shoot Squawk Box, and they also used to film some Investors Business Daily show here. I think this is new. It seems like there's a new billboard popping up every day in the city, particularly Times Square. But this building is 5 Times Square, and I think this is almost completely vacant, believe it or not. EY has now vacated this building, and they are at the Hudson Yards now. Crazy. Now, in terms of software though, everybody, I think what I'm most excited about over the next, let's say, 5 years, I would place my bets in cybersecurity. I think the TAM, or the total addressable market for cybersecurity, is probably going to double. I think it's a double in 5 years. So I would keep my eye on companies like Palo Alto Networks, Zscaler, and the like. Because think about all of these immersive trends, right? This is the Brooklyn Diner. This is how I like to think about it. Think about all of the new emerging trends in machine learning, artificial intelligence, and the more endpoints you have, right? So I have a little bit of experience with this because I used to sell some cybersecurity software through the channel. It's called Channel Partners. So I actually sold Zscaler products back in the day. And the specific type of cybersecurity software that I sold is called endpoint security management. So in the tech world or in the cybersecurity space, they teach you the more endpoints you have, the more spots for vulnerability for malicious attacks and actors to access your corporate veil or your corporate network, so to speak. Right in front of us, this is the brand new One Vanderbilt building. It looks absolutely beautiful. And right here, this is Brian Moynihan's company, Bank of America, which reported earnings today. And I have some concerns about Bank of America, but anyway, the more technology grows, right? Smartphones, tablets, computers, laptops, desktops, those are all additional endpoints. So if you work at a company, right, and you have your email on your work provided phone, you have your email on your personal phone, your computer, your laptop, your tablet, those are all additional endpoints that a malicious actor could potentially pierce and get access and compromise your infrastructure. So I know one thing is for certain. Technology is only going to expand. There's only going to be more and more devices out there, more and more endpoints, which means, unfortunately, right, since there's a lot of, malicious actors and scumbags out there, as technology and innovation grows, there's also going to be more organized cybercrime that's going to grow as well. So if you can just draw a simple correlation between the trajectory of growth in endpoints and growth in cybersecurity spend, there's probably going to be a near 1-to-1 correlation there. And I think that's going to benefit companies like Palo Alto Networks, Zscaler, even Cloudflare, things like that, Datadog. This is Steinway & Sons piano. These pianos, range from like $40,000 each. I think some of these pianos are even more. Maybe like $100,000 for a piano. It's kind of crazy. But they look beautiful, don't they? Hey, Jules, this is hello, Thomas. Nice to see you. Agreed with cybersecurity. Only thing with SaaS software is not as configurable as enterprise at times. That's true. But what you'll notice with a lot of these big enterprise SaaS companies is they integrate very well. So, you can API into different softwares. But to Jules's point, that's another reason why the higher the ticket price, or the closer you can get to the infrastructure and enterprise software, usually means the lower the churn rate. Usually. This is an amazing view of the Empire State Building here. So I'll give you an example, right? Let's say if you're a massive Fortune 500 company, and for your CRM you use Salesforce, and you have, 10,000 employees, and everybody's using Salesforce. And you're having some issues with it. You're having bad customer experience. Maybe it's a little bit buggy. Maybe it doesn't integrate well with your current HRS software, which is like your HR, human resources software, right? Let's say if you use a Workday or something like that. It's called, in the industry, it's called the pain to change. What the heck was that? You guys hear that? It was like a massive shrieking noise. Hope everybody's all right. It's called the pain to change, right? So imagine if you wanted to migrate from Salesforce to Zoho. I'm just making an example. And you have 10,000 employees. Well, that is going to take some significant legwork to do that. Okay, if anybody here has sold enterprise software or even enterprise telecommunications, it is especially if you're selling big enterprise deals to Fortune 500, Fortune 50 companies, my God, it could take almost a year to do all of the integration. So oftentimes people just, kind of stay with what they have just because of the pain to change. And that's another reason why a lot of enterprise SaaS becomes very sticky. And the churn rates are really low, because guess what? The pain to change, and you sort of need this software to run your business, right? If you don't have a CRM system, well, there's no business. And there's also other things, right? Like a MuleSoft. It's just so much stuff. It's an ingenious model. Speaking of Salesforce Tower is right here. We're literally standing right next to it. Hey, the Wizard is here. It says, good evening all. Long time no watch. Hope all is good, Tom. Thank you, the Wizard. Appreciate it. Somebody says Hack is a cybersecurity ETF. Ronix says Morgan Stanley took over my E-Trade account. Sean, what's up, man? Good to see you. All right, now this is a beautiful view here. Let's try to go inside Bryant Park. I don't think we're going to be able to, but right here is Bryant Park. You can see the beautiful One Vanderbilt in the distance here, as well as a little bit of the Chrysler Building. And it looks like they're building the Winter Village at Bryant Park right here. I think it's closed, but we'll give it the good old college try. We'll actually just walk around the block. Now, since we are outside of Bank of America Tower, and since they did report corporate earnings, I do have to bring up something that I brought up at the very beginning of the live stream, which I think is important to bring about again, just since we have, more people in here. Bank of America, right, according to their earnings report today, they have unrealized losses in the amount of $131 billion on their held to maturity bonds. So this is mostly their MBS portfolio, so their mortgage-backed security portfolio. But this is quite frightening, right? And this is kind of what happened with the regional banks. So here we are, Bank of America Tower. So if everybody remembers the Silicon Valley banking crisis, one of the main reasons why Silicon Valley Bank collapsed is because they took about $80 billion worth of cash, right, worth of customer deposits, and they pile drove them into long-dated, very low-yielding debt, particularly very safe mortgage-backed securities. Now, you might ask yourself, well, what's wrong with that? It's not like they're speculating in toxic derivative assets and doing advanced trading and all that stuff. Well, the problem is this. The mark-to-market value of those bonds have collapsed significantly. And that's because rates have moved up so fast. Now, in the bond market, there's inverse correlations. When you have the price of a bond being bid up, the yields go down. And when you have sell-off in the bond market, yields go up. So Bank of America did something very similar to Silicon Valley Bank. They drove quite a significant sum of money into long-duration mortgage-backed securities at significantly low yields. Now, that's all sitting on the balance sheet Now, if they hold these bonds to maturity, there's no issue, right? There's no problem. The problem is they may have to start selling these bonds, right, in an event of, well, use your imagination. So there's about $131 billion worth of unrealized losses on that. And a lot of regional banks are in the same sort of position. So the Federal Reserve, I think, is going to continue to raise interest rates until they break something. So what I'm trying to do, right, as a market participant, is look for vulnerabilities in the marketplace, in the banking sector, where something could potentially break. So when I look at the balance sheet of Bank of America, and I see $131 billion of unrealized losses on their held-to-maturity mortgage-backed security portfolio, that freaks me out a little bit. Now, I'm not like trying to instill fear, but I'm just saying we should look at that, and we should be cognizant of that as things move forward and progress. Because don't take my word for it. Take a look at the CEO, right, Brian Moynihan. Today on the earnings conference call, he said, and I quote, "This is a major thorn in our side." Right? Those are his words, not mine. So I think, as we view the world coming off of a decade of artificially suppressed interest rates, who else has massive exposure to these long duration bonds that they purchased throughout 2021 when yields were extremely, extremely low? I don't know. Now, this is one of my favorite buildings in all of New York City. This is the Stephen Schwarzman Building, New York Public Library. But if you guys want a deep dive, so this week is going to conclude earnings season for the major investment banks and financials. I'm going to do a deep dive, everything you need to know about what happened this earnings season. I'm going to write an entire research piece and send it out for free. Every other Thursday, I'm going to do this. I sent the one out earlier last week on Thursday. So if you scan the QR code or type !news, NEWS in the chat, it's going to drop the link to my free newsletter. And it's going to cover the US equity markets, global markets, fixed income, and real estate. So if you want to stay subscribed to that, it's a good way to support the channel for free. It's a good way for me to get my thoughts out there to all of you guys. And let me know your feedback. Let me know if you like the format of the newsletter. So if you scan that QR code, it'll take you to my Substack, Behind the Street newsletter. And coming soon, over the next 2 months, I'll probably actually start it in Q1 of 2024. Some of the newsletters will have interviews with prominent hedge fund managers, investment bankers, and top brokers in the real estate business. And all of that will be made free to Walks and Wall Street subscribers. This is a beautiful shot here. Let's actually check out the New York Public Library a little bit closer. I was going to walk to Grand Central Station, but since this is our first day back in New York, let's check out the Lions here. Now, bonus points for anybody in the chat who can name the names of the Lions. Anybody know the two names of the Lions here? The one on either side? Bonus points if you can name it. But look at how beautiful the architecture is there. Really stunning. Sparks Carnival, you got it. Patience and fortitude. 10 out of 10. 2 bonus points for you. Well, let me take the QR code down here. Destructionists, as my husband says, Bob and Joe. Hilarious. You were actually correct. All right, now the views from Library Way are the best in the city to see the New York Public Library. Let me just stand back a little bit. You'll see exactly what I'm talking about. Look at that. I like it because it's an interesting contrast between the old style architecture and the new architecture of the Bank of America Tower and the H&M building. It's really stunning here. Yeah, TCal says it should stay open late. Well, I agree with you, TCal, but unfortunately, you know, we have some incompetence going on here in the New York City government, and they're actually going to cut funding for the public library system, which is just absolutely ridiculous. But don't get me started on that, because I'm going to be ranting and raving, and then you guys are going to get upset. And I don't want to get you guys upset. Oh, no way. Hang with Mark Moms, as my last visit inside that library was in 2019. You got to go back. I'm telling you, you got to go back. I mean, there's so many resources that the New York Public Library system has. The problem is nobody knows about the resources, right? You can even take out free audiobooks. There's free audiobooks, there's free Bloomberg terminals. I'm sure nobody knew that. Now, for those of you who don't know, Bloomberg terminal, if you work on Wall Street or you work in consulting or really anything, that's one of the most expensive pieces of financial software on the planet. This is PwC, PricewaterhouseCoopers. It's about $2,500 a month per license. And right here at the New York Public Library, you can use the Bloomberg terminals for free. It's just that many people don't know about it, and I think they should. So in my opinion, right, if I was the mayor, because we have a big crime surge here in the city, I would actually spend money on running targeted Facebook and Instagram and even TikTok advertisements to young people in New York City. So I would specifically run targeted advertising to people aged 8 to 18 and target people in the New York City public school system. And these advertisements, you know, should be catchy and they should be good, and they should showcase all of the resources that are at our youth's disposal here in New York City. Because one of the main reasons why young people turn to crime and doing like petty crimes, stealing stuff, vandalizing things, is because they have nothing else better to do. You got to keep the kids busy. So imagine if you are an underprivileged youth in New York City and you're getting all these targeted ads. Hey, come take a free class at the New York Public Library and learn how to use the Bloomberg terminals. Next thing you know, the kid falls in love with the financial markets, gets a full ride to a good school, and he's making $250,000 out of college at an investment bank, or doing whatever else he wants to do. So I think, you need to hammer these people and literally be in front of them all the time, right? Here's the free resources that the library offers, here's the office hours, and here's a link to everything we offer for free. Here it is. And you got to hammer them about it, right? But, I would argue that probably 80% of the people in this city really have no idea of just the unbelievable resources that the New York Public Library has at their disposal for free. It's almost unbelievable. But, it's sort of like that, I forget who said this. I think it may have been Steve Jobs. He said you could have the best product, it could be the most supreme product and beat out everybody else. But if nobody knows about it, nobody's going to use it, nobody's going to buy it. So you have to have brand awareness and marketing. So instead of cutting the library's hours and shutting them down, you should actually be putting more dollars into it for advertising so people utilize it. right? The underutilization is a product of not getting the message out, right? Hey, marketing videography, what's up? Good to see you and welcome back to New York. Sparks Carnival says China's Q3 economic growth came in stronger than expected. China posted 4.9% growth according to the... No, you know what? Sparks Carnival, I have a question for you. Do you fundamentally trust those numbers? I think that's the question. I think that's the $1 million question, because you have all of this really turmoil, particularly in the real estate market. You know, earlier in the live stream, we talked about commercial real estate in the United States. If you think that's scary, you really, really have to think about commercial real estate and, you know, even residential real estate in China. That is really, really scary. That's the horror show. So that's the question. What can we trust? Oh, hang with Mark Mom. This is the HSBC. I forgot. Yeah, HSBC Tower is right behind Bryant Park. This is HSBC Tower here. Actually looks really nice. I walk past this probably every day, but I never really notice it. Has a nice lobby, really nice vaulted ceilings. Hang with Mark Mom says, there it is, HSBC. The one I had to go to. Yeah, it's nice. You know, it looks like they did some renovations. When you were here last, did it look like that on the inside? It looks like the lobby got a brand new facelift in there. All right, let's go back to 6th Avenue. But if you're all enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually go live starting at 8:30 p.m. Hey chats, thank you for doing this. Now I really miss New York City even more. Well, hopefully you'll be able to come back. The holidays are almost here. You never know, you can come back. Hey, Jeff W277 says, I used to have an HSBC credit card, but now it's a Goldman Sachs card. Oh, interesting. Yeah, Jeff W277, we talked about that tonight. I think Goldman's getting out of that business. I think they have a partnership with Apple. This is Stella and Charles Gutman Community College. This used to be called the New Community College. And it's in the CUNY system, the City University of New York. I was about to go to this community college. I even remember going to the orientation in here. Now it's called Stella and Charles Gutman, but it was called the New Community College. Still looks the same. I remember going to the orientation and everything. I almost went here. Oh, Chad says, yeah, I live in New Milford, New York, but I grew up 40 plus years in the Bronx. Very nice. Yeah, hopefully you'll make your way down here. Oh, look at this. GH Venues. Guys, this used to be the WeWork office. I used to work out of here sometimes. Now it's GH on the park. That's interesting. This used to be a WeWork. Huh, seems like a lot of things are changing now. I know, Hang with Mark Mom says, yeah, they have a partnership with Apple and they openly regret the decision. Yeah, well, it's lost them a lot of money, and so did Marcus by Goldman Sachs, lost them a lot of money too. Now, speaking of China, we're fast approaching the Bank of China, which is going to be directly in front of us. Hey, Keisha Lee, thank you so much for joining us tonight. Appreciate it very much. Hopefully you come back tomorrow night. Let's cross and we will make a left. There's a good coffee shop right here called La Colombe. Sparks Carnival says Roblox just told their employees they must return to the office at least 3 days a week or they're fired. You know, that's such a good conversation to have. And I think many of you predicted this. Well, like, you know, us collectively on the stream. That's usually what happens, right? When companies want to, because here's the thing, if a company fires you or lays you off, they have to pay you severance, and that's a massive cost. So a lot of times what they'll do, these corporations, it's called manage you out of the business. I'm sure all of you have heard of that before. So they'll say, you know what, you have to report to the office 3 days a week or you're fired. But here's the thing. They'll put in the contracts that you have to show up at 8 o'clock in the morning on Tuesday, Wednesday, Thursday, and then they will micromanage you. And if you show up at 8:30, they write you up. If you show up at 8:05, they write you up. And they're like, hey, you voided the contract, and they manage you out of the business. And they're on top of you, and particularly if you're in a sales role, they get really, really, really cracked down on you about hitting your sales metrics. So, you know, I think as you're going in this downturn, and these companies are paying so much in rent, and they're trying to get out of their leases, they're like, look, it's either you come back to the office and utilize the space, or we're going to make it very, very difficult for you to work here, and in hopes that you quit. It's called managing you out of the business. I know, Hang with Mark Moms is toxic workplace to get rid of you. It's a popular bullying tactic. But look, I mean, I'm just talking the truth, right? I mean, has anybody in the chat experienced anything like that? I mean, it's a very well-known thing in the business world. You know, they try to manage you out of the business to get you to quit so they don't have to pay you the severance. Let's say if you're a software engineer and you're used to working remote 5 days a week, and they say, hey, guess what? You got to come back to the office. Look at all this trash. You know, they sort of try to push you out, but anyway, guys. Well, welcome back to New York City. I'm really happy you guys joined us here today. And it is time for me to go. But the good news is we will be back tomorrow on Wednesday. So if you enjoyed the live stream, feel free to give it a thumbs up. Subscribe to the channel if you're new. And we will see you back here on Walks in Wall Street tomorrow. If you want to sign up to receive our free equity research every other Thursday, go ahead and scan the QR code on your screen. It's going to take you to our Substack, and every other Thursday after the market closes, You're going to get all of our research on the equity market, fixed income, and real estate market. And lastly, if you're looking to buy, sell, or rent anywhere in New York City and you need an agent to help you out, go ahead and send me an email and we will be more than happy to help you out here at the Kirsten Jordan team at Douglas Elliman. So Wendy England, I appreciate it. JC, thank you so much. All of our moderators, Hang with Mark Mom, Brian, DM, thank you so much. Appreciate it. Sharon, good to see you. Teresa Diaz, the LT Prod, Hawaii. Jules, appreciate it. It was very fun. Tony, Valor Rabbit, our friend Photos from around New York. And of course, there's always a bull market somewhere. You just need to know where to look. Western Mass, Dave, Jacqueline, all our friends, take it easy. Austin City Limits. See you guys tomorrow. Take care.